we're around 3K, around those levels right now. Can we just start with some of the conspiracy theories out there at the moment? Maybe they're not conspiracy theories. I want your thoughts on Fort Knox and where some of this buzz is coming from.
Well, I really don't know how people come up with these things. You know, it's kind of a social media frenzy probably. But look, I mean, we've heard it from the U.S. government. The gold's there, and will they need an audit? Will they want to have an audit? I don't know. But certainly those 8,000 tons of gold have been there for a very long time, and the U.S. government hasn't really changed its policy on gold holdings for decades, right? So. So I think the market is confident the gold's there.
When you speak to clients, Francisco, have you got a decent read on why we're seeing some of the movement we're seeing? We've seen lots of reports about gold shifting from the United Kingdom over to the United States and being taken out of the vaults of the Bank of England. What is going on there? What's behind that?
Well, there's a couple different things. There's, as you know, there's been a strong demand for gold from investors as a result of a lot of the policy changes we've seen in recent weeks and months, but also is the fact that tariffs could be applied on gold. So the U.S. gold market, COMEX, trades on a net basis of the tariffs. So what we've seen is forward points in the gold market have essentially started to reflect some of that. And also we've seen shippers trying to move gold from London, where the biggest market sits. The London bullion market is the biggest in the world, and we've seen that physical arrangement to push gold out of the UK particularly into the US market. That's been what's been shifting the shape of the gold forward market. But also I think the uncertainty around how things will play out. Gold's becoming, I think, more and more a core tenet of portfolios, and frankly, one of the few assets that has been providing diversification to equities and bonds. And I think that's the story. So we've seen, ironically, some backwardation kind of building back into the market. Not yet, but in the past it's happened. It happened during COVID. It happened during the Great Financial Crisis. So could we see it again if tariffs kick in? It's possible.
Francisco, as someone who personally tried to visit the gold vaults in the UK and was rejected and told I couldn't, I feel personally invested in this story. A physical arbitrage like this, how long can it continue, this sort of dislocation in the market?
It can go on for a while. I have also visited the New York Fed Vault, and I did see a lot of gold when I was there 25 years ago. So I actually didn't get rejected. So just as a little anecdote, it was during my associate program back in the day. But I think the arbitrage can go on for a while. Until there's certainty on what will happen to tariffs, right? And to me, I mean, the whole tariff discussion is very much one tool to put pressure on certain political goals. So as long as the Trump administration feels they can use tariffs as leverage, they'll continue to use them, and therefore the gold market could still be tight for several months, I think.
That gold you saw, that's the gold of the BOE and other central banks, right? The Federal Reserve gold is other central banks, and our gold, the U.S., is in Fort Knox. So interesting there, where all this gold is stored around the United States. We also spoke to the Treasury Secretary about this idea about monetizing the balance sheet. Many people thought he meant maybe actually remarking U.S. gold. Now, he said that's not what he meant. But what if they did do that? What would that mean for the price reaction?
It's hard to say. I mean, but I think remarking U.S. gold is an accounting exercise for the most part. But it would certainly increase the Fed's balance sheet quite a bit, because that gold is marked at a very low price, as you know. So it would effectively boost the Fed balance sheet, and it would change the composition of it, at least on an accounting basis. I think it would probably be bullish for the gold market, because it would show that gold is no longer this barbarous relic that has been sitting on central banks and been dismissed a little bit. But now even the biggest central bank of them all is taking a renewed interest in gold. So certainly, I think any renewed attention will be constructive for the market. That's my initial reaction.
If it's constructive for the market, and we do know this administration likes to be creative, would you take it off the table?
Yeah, it's possible they take it off the table. I mean, I'm not sure why you want to boost the gold price at this point. I think what the U.S. government is really trying to do is lower energy prices so inflation can continue to normalize and allow for lower interest rates. But I think they're also trying to weaken the U.S. dollar. I'm not sure how bringing attention into the gold market is going to help any of those two goals. So bringing down inflation, or three goals, right? Bringing down inflation, bringing down interest rates, and eventually weakening the U.S. dollar, which is, as you know, at record high levels or near record high levels.
Francisco, let's pick up on that last point. Bringing down energy prices. How can they go about doing so?
Well, we've seen this past couple of weeks has been fascinating to watch, right? We've had a meeting earlier in the week in Saudi Arabia, Russia, and the U.S. These are the world's three largest oil producers by a long stretch, and you can't help think that energy has been part of the discussions. I think that last third goal that Secretary Rubio mentioned in his comments of potentially engaging in some economic cooperation with Russia was a bit of a surprise to many because European companies, U.S. companies have been pulling out of Russia for the last 3 years, or trying to pull out of Russia for the most part. So what does economic cooperation mean? In what format? Ultimately, Russia is a commodities producer, mostly an energy producer. So any cooperation is going to come on the energy front. So we know that President Trump wants to lower energy prices. Is that part of the deal? I don't know, but for sure, something that's been brought up in the conversations. How does the U.S. bring down global energy prices? How does that impact the inflation picture? And also remember, there's potentially an angle here, which is if Russia eventually gets sanctions relief, does that mean that we have a new stream of petrodollars flowing into the market? And are those petrodollars potentially as well a source of funding for the U.S. government down the line as we see kind of this constant need to fill that $2 trillion budget deficit in Washington?